Hey everybody, what's up? Today we are looking at Air Test Systems, AEHR. They specialize in manufacturing components for the semiconductor industry. So definitely a high growth area, definitely an interesting stock to look into. So if you're interested, we're going to be going over everything with this company today. Make sure to subscribe if you haven't and comment below what companies you want me to review. I do them every single day of the week. So let's get into Air Test Systems. So starting off with Air, we could see equipment used in the semiconductor industry. It has a fairly large list of products. I'm not going to go over all of those, but overall, semiconductor industry. Looking over here, we could see market cap is actually 490 million, which is very low considering their sales and also the industry they're in and the hype around it. So we'll get into that in a little bit, but I think this is very low just considering what the company is doing. But other than that, target price is $25 a share. Long term growth rate is 20%. Really solid there. We're at $17 a share right now. So a little bit under, actually significantly under that target price. So let's go down here to their growth summaries and I'll kind of show you some of the solid numbers. So, first of all, 10-year CAGR is 12%, which is really good. EBIT 35%, net income 54%. That is massive. This company will definitely be growing enormously over the next few years, just based on how it's kind of positioned in the semiconductor industry to support all of those companies like Nvidia, Micron, AMD, and actually later we can get into their customers, and I'm sure that those companies are on their list. And I believe we can actually see here. And okay, so I was wrong about all of that. But we have a few big ones like Texas Instruments on semiconductors, um, government of the United States of America. So basically, some pretty solid customers. Nvidia is not on here, but either way, pretty solid. Let's head into their earnings now and see what we're looking at. So this is over the past couple years. You could see after kind of the pandemic era, their sales massively increased to now at, I believe, 66 million. It should be million here. And yes, so 66 million in sales. The company's worth half a billion, under half a billion. I think those multiples don't add up as solidly as some other companies in the semiconductor industry. So definitely something to consider there. But other than that, gross income looks solid. This is just an estimate for um, the last quarter, I believe, of 2024. Or sorry, August 2024. Maybe the last half year of 2024. I'm not sure exactly, but don't pay attention to that one. We're looking at the fiscal year data. Net income is massively positive, and actually in 2024, it basically doubled, which is fantastic. We could see their total shares are increasing, but honestly, not at too crazy of a rate. Although, to be fair, they did add, looks like right around 6 million more shares in the past 4 years or so. So there are a lot of shares being added, but you could see it went up by 4 million, then a little over 1 million, and then half a million. So hopefully that is slowing down. Um, we could see in the estimate here, it's at 29.58, so another half million possibly. But overall, I think their share diluting is slowing down, and they will most likely not need to do that anymore just based on where their net income is. I doubt they will need to do it. Going into their balance sheet, I'm assuming we'll see some very solid asset growth here just based on where the company is. And we could see, yes, there is massive growth going from 21 million in assets to over 127 million in assets is pretty solid within 4 years. One thing I will say is that the multiples with their assets being a quarter of their market cap is fairly normal. I would say I think earnings are a little bit better of a valuation for that though, but overall I think based on the way their assets are growing, this company will be growing a lot more in the future. A lot of cash, almost no debt, 5 million in long-term debt, which actually came down from a year before, and they have just under 50 million in cash. So overall, really solid in terms of their balance sheet. Um, but also another thing, their net retained earnings are going to be positive probably within maybe 2 or 3 quarters just based on this. So that's usually a positive indicator for most companies. So yeah, balance sheet looks really solid. Let's go into the cash flows. We could see operating cash flow just in the past 3 years has been going positive. 2023, it was massively positive, but now I think we're kind of returning to a normal area. Um, Other than that, investing, we can see a lot of investments sold this year. However, basically the same number were purchased last year. So I believe that's probably just them maybe going through whatever they don't need anymore. Couldn't really tell you the specifics on that, but I think just because these numbers are very similar, it's not too big of a deal. Changing capital stock, again, we could see it is slowing down. They're not issuing as much as they used to. So hopefully that trend continues and they stop issuing altogether. Personally, just based on the way their net income was looking, I don't think they would need to issue at all anymore. But again, they could have other plans that they're working on that they need more money for. So there's always that aspect of it. Free cash flow has been positive for the past 3 years, which is really good. Free cash flow being positive is probably one of the most important things you want to see in a company. Now, to be fair, their free cash flow is $1 million. So it's not like crazy numbers, but just having it being positive is a good, very good thing. So, going into their sales history, we could see they were actually having a rough time for a few years, especially before COVID and even during COVID as the pandemic was starting. And since then, they have just exploded in their amount of revenue that they've been making. So, I do believe that this trend will likely continue or at least hold up to what it has been doing. It has slowed between 2023 and 2024. You could see total revenue was 65 million compared to 66 million. So that's not insane, but I think with the way the market is moving, that will improve with time. Now, going into their ratios, I would like to see some positive indicators here. So gross margin decreased year over year. However, the 5 year average, it's way over, which is good. SG&A to sales, we're at 33.41 on the 5 year average. That is very solid. Operating margin is way higher than it used to be. Same thing with net margin. A 50% net margin is insane. I honestly, I couldn't tell you how net margin gets higher than operating margin and gross margin. It had to be from other sources of income other than just their operations. But overall, having that 50% there is massive. You can see the ROA, ROE are both very much increasing way above their 5 year averages. So that is really, really good. And then another thing I was looking at earlier, the price to sales, they're at a 5x multiple, which if we go to their comps analysis here and we look at the other companies that they are kind of in their, I don't know what to call it, their industry, I do believe that will be significantly lower if we can find it here. So, price to sales, this one is saying 8.35, and actually it is higher than the other ones that are here. So, second prediction for me wrong of the day, actually. But one thing I will say for that is that I could not tell you what any of these listed companies are. So, I wouldn't take too much of a focus. I wouldn't focus on that too much. But overall, still, I do believe they are a very solid company. They actually have significantly less sales than all of these companies, which is definitely something to look into, assuming these are all like direct competitors in their industry, which they should be, but very much less sales than all of them, and a price to sales that is significantly higher than all of them. So do with that information what you will, basically, is what I'm saying. Other than that, moving on, I think we're good with the ratios. So let's go into their recent earnings report, see what we see. For them, we have some quarter 1 earnings right here. So revenue beat estimates, bookings were 16 million, backlog was 16 million, total cash was 40 million compared to the what I'm assuming is the quarter before at 49 million. reaffirms revenue of at least 70 million for 2025 versus the estimate of 71. So they did, it looks like they, I don't know if they specifically lowered guidance, but they did not meet expectations with their guidance. Net profit of at least 10% of revenue for 2025. So that margin should be coming down from the 50% that it was at in 2024 that we saw earlier. But overall, they have some comments here about the actual company. Another solid quarter for their wafer pack sales, wide range of that device types aimed at multiple markets. So hopefully, with this CAGR being 40%, hopefully they can really capitalize on that and basically just increase their revenues. Because from what I'm seeing based on their comps, which is competition, their sales are nowhere near their competitors and their market value is similar to all of them. So something's not adding up there, but there has to be something different that I'm not seeing. But overall, market value being fairly close to all of these, but their sales up here being a fraction of all of them, there's definitely something going on that I am not aware of. But anyway, let's get into their stock price. You could see they were up way higher at over $50 a share. That valuation right now is impossible. Just that's just how it is because just based on the way their competitors are and their sales multiples, that is not going to happen unless they have something huge coming out. But one thing I will say is they clearly found a support area right around $10 where their price keeps bouncing off of that. Um, I don't think it'll go below $10 because it's just there is value here. However, I don't believe that they're at $16 worth of value. I do think it will drop back down to this range just based on what I'm seeing. But overall, I mean, it could continue going higher if there's hype, if they come out with some bigger announcements. But overall, I'm going to go ahead and say that this company will most likely return to right around the $10 range for a while until they have increased sales, which based on what they said for 2025, 70 million compared to all of their competitors making hundreds of millions more in revenue than that, probably not going to be seeing crazy growth just based on what I'm seeing. That's my opinion. But that's all I have for air test systems. Hope you enjoyed. Hope you learned something. Thank you so much for watching. Make sure to subscribe if you haven't. And I will see everybody in the next video.